It's over. China's economy crash is far worse than you think. China's growing as a superpower. What if I say things are growing exactly the opposite? Yes, you're hearing me right. There are certain things that are taking China exactly the opposite way of where it is intended to go. Let us find out how. Hello friends, and welcome back to Finance Basics. Today we're back here again with another interesting video. China is over. Its crash is far worse than you might think. How? Well, that's what we're here to discuss. Stick with us on this video and watch it till the end so you know everything about it. Because what occurs in China will have an effect on all of us. We should all be concerned with what's going on there. The economic threats and President Xi Jinping's answers to them will have the most significant impact on China, but problems in China might spread to other countries in the next year and the ones after that. The crimes being done by Russia and Ukraine have rightfully captured the attention of the international community, and China's decision to side with Russia is putting pressure on the connections that make up globalization. However, China's economic difficulties are not only attributable to the conflict. There are four different but interconnected areas in which China's future is becoming more precarious. Domestically, in terms of health, in terms of debt, and internationally, in terms of a world that's breaking apart. Chinese real estate defaults continue. The previous year witnessed a record number of defaults among Chinese developers, starting with Evergrande and going all the way down to smaller firms. According to S&P's predictions, between 20 and 40% of property developers may end up defaulting on their loans. According to a survey published in January by the Peterson Institute for International Economics, a nonpartisan think tank, property development contributes between 25 and 30% to China's overall GDP, the gross domestic product. The authorities of China need to question themselves if their country's political support for a failing, weak, and unpredictably unpredictable Russia is more valuable to China than a globally interconnected world in which all rivals adhere to basic laws and standards. A decline in the value of the real estate is likely to have a negative impact on the whole economy. Economists have shown that a majority of economic downturns are brought on by a collapse in the stock market or the housing market. Once house prices begin to shake and fall, we know the impact of debt on decreases in home prices. The former magnifies the latter and may induce a collapse in broader consumption. Once home prices begin to shake and fall, however, we do not know the effect of debt on declines in home prices. As the value of their homes continue to decline, homeowners who are underwater on their mortgages cease spending. The situation in China has not yet reached such a precarious turning point. However, there are warning flags appearing everywhere. It would be stupid of us to believe that the typical principles of economic boom and bust never apply in China, or to assume that Chinese officials can always efficiently regulate pricing over the whole nation eternally. Both of these assumptions would be incorrect. Nevertheless, we have no choice but to keep our fingers crossed that they will be able to handle housing better than the West did in 2007 and 2008. The repercussions of China's pandemic policy are making economic conditions worse, and this comes at a time when the property markets in China are experiencing shaking. The Chinese government's zero COVID policy, which is by far the most stringent medical and public health reaction anywhere in the world to the epidemic, is in jeopardy. China continued to function in a manner that was generally free of the virus in the years 2020 and 2021 because of the country's steadfast attitude towards prevention, which paid off in a major way. On the other hand, due to the virus's ability to quickly mutate and spread, the costs associated with these preventative measures may have increased. An increase in the number of cases in Shanghai to almost 20,000 per day prompted the city to shut down a week ago, which in turn sparked discontent among the city's 26 million people and resulted in their isolation in all of them. The city of Shanghai is home to China's biggest port and accounts for 4% of the country's overall gross domestic product. China's urban areas are coming under increasing pressure to implement lockdown procedures. In the next months, the economically detrimental implications of the government's difficult-to-maintain COVID policy will become more apparent. Already, experts are revising downward their projections for the country's rate of economic expansion. If there is a drop in demand in China, businesses and consumers in other countries may also experience a slowdown. It is not obvious if the central government is willing or able to transition from a policy of zero tolerance to a new approach, despite the fact that an adjustment of this kind seems to be increasingly required from an external perspective. In the industrialized world, efforts are being made to rein in inflation, which has led to an increase in interest rates. Many loans provided by Chinese corporations as part of Beijing's Belt and Road Initiative are not only straining balance sheets in low-income nations throughout the world, but they will also burden China's banks with non-performing loans. This situation is a double-edged sword for China. That in turn will have an effect on the economic performance of those banks, which are crucial conduits for Chinese domestic investment, enterprises, and the economy. According to a study that was published in 2021, which is an international development research lab with its headquarters at the College of William and Mary in Virginia, Belt and Road have caused developing governments to incur debts of at least $385 billion. There, China is confronted with three negative dynamics: debt defaults, non-performing loans on the files of its major banks and state lenders, and collateral damage to diplomatic and geopolitical interest if Beijing seizes country's assets as part of often onerous lending conditions. 2022 will be the year in which the leadership of China realizes that not all lending makes for good policy. Even though the deal looks favorable at first sight, China wants solvent borrowers, pleased consumers, and friends rather than bilateral sleight-of-hand defaults and unhappy people. This is because China's economy is dependent on trade. The military intervention of Russia into Ukraine. Under the strain of the pandemic and Russia's conflict with Ukraine, globalization, which serves as the driving force behind China's economic growth, runs the risk of coming to a halt. The supply chains are either being pushed so thin that they break, or they are being reconstructed with new pathways and new linkages. The authorities of China need to question themselves if their country's political support for a failing, weak, and unpredictably unpredictable Russia is more valuable to China than a globally interconnected world in which all rivals adhere to basic laws and standards, and everyone stands to gain from the implementation of a global architecture. Choosing Russia over the process of globalization in which their nation is so completely involved is a foolish and dangerous economic deal, and one that might result in secondary penalties being placed on Chinese enterprises, as the United States has warned. It is possible that Russia may go on with the war while being weakened and reduced in size, relying on its reserves of oil and gas for support, while being shunned by the majority of nations across the globe. If China maintains its support for Russia at the cost of involvement with the global trade system, which China is dependent on for continued economic progress, China might end up having to pay a significant and hefty price too. The Chinese government's official prognosis for 2022 calls for a growth rate of 5.5%, yet all these difficult hurdles imply that this projection is too optimistic. In point of fact, it's becoming more probable that China would have economic growth of less than 5% in the year 2022. This is a pace that's not been witnessed in China since the catastrophe that occurred at Tiananmen Square in 1989. Even if we occasionally mistrust one another, the world as a whole would suffer economically if such a scenario were to play out, and China's situation in particular would be a source of concern. Let's keep our fingers crossed that the decisions that are made will be sound ones, and those that have a more global perspective rather than one that's created in a limited way. So, here we are, done with today's video. Please let us know in the comment box what will happen to China, and whether you think it's going to collapse or not in your view. We'll be awaiting your comment. And if you liked our video, please leave it a like and share it with all your friends and family. Plus, you can subscribe to our channel and hit the bell icon so you always are notified of our latest videos. Thanks for watching, and we'll see you next time.